Are you confused about which Forex strategy actually works for beginners? With so many complicated systems out there, it's easy to feel lost. But here's the truth. You don't need hundreds of strategies to start trading. In fact, sometimes the simplest methods are the most effective. In this video, I'll walk you through 3 easy Forex strategies that every beginner can understand and start practicing right away. No advanced math, no confusing terms. Just clear, step-by-step trading methods. One of the biggest reasons beginners lose money in Forex is because they trade randomly. They enter and exit without any real plan, relying only on gut feelings. The problem with that approach is obvious. Without rules, your trades become pure gambling. That's why having a strategy is so important. A strategy gives you structure. It tells you when to enter, when to exit, and how to manage risk. In this video, we'll cover 3 beginner-friendly strategies: moving average crossover, support and resistance, and breakout trading. Each one is simple, practical, and designed to give you a solid foundation. The first strategy is the moving average crossover. Moving averages are indicators that smooth out price data, making it easier to spot trends. Here's how it works. You place 2 moving averages on your chart. A short-term one, like the 10 period, and a longer-term one, like the 50 period. When the short-term moving average crosses above the long-term average, that's a signal to buy. When it crosses below, it's a signal to sell. For example, if you're looking at the EUR/USD on a 4-hour chart, and the 10 period average moves above the 50, that's a potential buy trade. This strategy works best in trending markets. It won't always be perfect. You may get false signals during sideways movement. But with stop-loss orders in place, it's a simple and effective way to catch trends. Beginners love it because it's visual and easy to follow. The second strategy is based on support and resistance. Imagine the market like a bouncing ball. The floor is supported, the level where price often stops falling and bounces back up. The ceiling is resistance, the level where price often stops rising and comes back down. Traders use these levels to plan entries and exits. For example, if EUR per USD has bounced off 1.08 several times, that level becomes support. You could look for a buying opportunity near that area, with your stop loss just below it. On the other hand, if GBP per USD has struggled to break above 1.30, that level becomes resistance, and you might look for a sell trade near it. This method is simple to use. You just draw horizontal lines on your chart. The beauty of support and resistance trading is that it teaches you market psychology, where buyers and sellers usually step in. It's one of the oldest and most reliable strategies in Forex. The third strategy is breakout trading. Often, prices move within a range, bouncing between support and resistance, but eventually the price breaks out, either above resistance or below support. That's where traders step in. Here's how it works. If price breaks above a strong resistance with good momentum, you look for a buy. If it breaks below support, you look for a sell. For example, let's say GBP/USD has been moving sideways between 1.28 and 1.30 for days. If it suddenly breaks above 130 with high volume, that could be a breakout buy signal. But be careful. Breakouts can sometimes be false. The price may break out for a moment and then return inside the range. To protect yourself, always place a stop loss just below the breakout zone on a buy, or just above it on a sell. With practice, breakout trading becomes a powerful way to catch big moves. Now, before you rush to try these strategies, remember this. No strategy works without proper risk management. Beginners often lose because they risk too much on one trade. A good rule of thumb is to risk only 1 to 2% of your account per trade. If you're trading a $100 account, that means no more than $2 per trade. Always use stop-loss orders, and never move them further away when a trade goes against you. These 3 strategies are simple, but their real power comes from combining them with discipline and patience. Risk management is what separates traders from gamblers. It's important to keep your expectations realistic. These strategies are tools to help you learn and grow as a trader, not magic formulas for instant success. With time, you'll see that consistency matters more than one big win. Focus on practicing, testing, and refining your approach. Use demo accounts first, then move to small live accounts. The goal is steady improvement, not overnight riches. So there you have it. 3 simple Forex strategies every beginner can use: moving average crossovers, support and resistance, and breakout trading. Start by practicing them on a demo account. Stay disciplined and protect your capital. For more beginner-friendly Forex guides, don't forget to subscribe to Pip My Trade and continue your trading journey.